You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again for another episode, the second episode for the new year of Volatility Views. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network, reminding you, all of you folks out there, if you do like what you hear, again, it was just another record year for the show and indeed for the network. We want to thank all of you for helping to make that happen. And, of course, if you do like what you hear, do keep rating and reviewing. It clearly does help all the new folks continue to enjoy and discover the program. And of course, if you want to go above and beyond, then you can join us over there at the old secret club, theoptionsinsider.com/pro, or for you cool kids /secret club. I get you access to all of the great pro content, hundreds of hours now of exclusive pro content for you folks, just because we love you, as well as, of course, live access to this, everything else we do. Coming up a little bit later today, options oddities, and we do even have a pro Q&A on the docket. So a lot of fun coming up a little bit later there today. So theoptionsinsider.com/secret club is the place to go for all of that fun. And joining me today on the old Vol Views program as we head out to the Southern Volatility Mecca known as Austin, we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views for the second time now in the new year.
Yeah, happy to be here. Weird day in the market. I would say it's a little strange. It's like watching paint dry. This and vol itself is falling off a cliff.
Nobody wants to own vol going into the weekend. Apparently, just nobody. They are coming for it, super fast and furious. And let's see who's coming for the old hot seat on the show today. I do believe we are joined, if the technology gods are smiling upon him, for the first time in the new year by Mr. Jim Carroll, the Senior Vice President and Portfolio Manager over there at TOROSO Advisors. Jim, are you there, sir? And Happy New Year to you.
Can you hear me?
Yes, we can hear you.
Thank goodness. Yes, Happy New Year. It's maybe a little too late to say that by some standards, but here we are nonetheless.
We make our own rules on volatility views, Jim. And we say, by golly, we could say Happy New Year. I could say Happy New Year to you on December 31st, and you could still say, you know what? Awesome. Let's do it. So we play by our own rules here on the old Vol Views show, including when we kick off the Volatility Review segment, which fortunately for you listeners is right now.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we break down everything that's rocking and rolling out there in these, as the meatball put it, weird markets to end the week. We'll get to all that fun in a second. Seems like the markets are fighting to get unched to positive on the day after starting a negative, and vol is, as we mentioned, falling off a cliff. But before we get there, Mr. Jim, joining us by that magical technology known as telephone. A lot of people having issues, it seems like, these days with the old Skype. You're about the second or third people having to beam in via the magic of the old school copper wire. But we will fight through it nonetheless, Mr. Jim. This is the opportunity at the beginning of the year when I ask everyone this question about their thoughts and takeaways from the new year. Usually they give me a couple of ideas, a couple of the trends that really resonated with them over the course of last year from a vol perspective. But Jim, you have taken it to the next level. You have prepared an entire dissertation, an entire thesis on all of your many and varied takeaways and highlights from the vol market last year. So there you go, Jim. Take it away. The floor is yours. I have earmarked 48 minutes for you. Have at it, sir.
Well, I hate to disappoint, but I won't take up 48 minutes, at least not all at once. But 2022 is definitely going to go down as one of the weirder years in volatility. We've talked about that before, and you've talked about it with other guests. After a relatively calm 2021 post-pandemic, 2022 made it clear that we're in what I refer to as a high vol regime. But there were so many times when it didn't feel that way. On the one hand, by one measure, we had more individual 10-point spikes in the VIX than any year since 1998. Now, that's not measuring duration of those spikes, but just saying that VIX moved 10 points higher from a 21-day low 9 different times in 2022. VIX also had 2 long streaks above 20. And VIX futures, the time that VIX futures spent in backwardation, just measured simply by the front month VIX futures being above the second month VIX futures, was a big jump over 2021. And with all that, you'd think that the bears would have been in paradise. But the reality was that the only bearish bets that worked, and they didn't work all year, but was literally being short. If you look at the performance of stereotypical hedges, whether that's puts on the S&P, calls on the VIX, the performance of those was downright terrible. And all of that just proved very frustrating for anybody who was either trying to play volatility or protect against volatility. You put it all together, and it was really just kind of a head scratcher. The peak in VIX came in March after Russia invaded the Ukraine, and we all had our hair on fire. the S&P went on to make several lower lows after that, and every one of them was met with a relative yawn in the volatility complex. People just couldn't get excited. It was like, oh, the S&P is going down again. So what? It's not crashing. It's just sliding. We're not going to worry about it. And probably that was because a lot of people simply reduced their equity exposure either coming into the year or early in the year when it became clear that the Fed was going to get at least sort of serious about raising rates and that inflation maybe wasn't quite as transitory as people thought. So I will leave it there and give you back 43 minutes of your time.
I budgeted 48 minutes, Jim. You got more to dig into here. But yeah, this is a pretty epic presentation you got here, which hits on a lot of the points, you're right, that we have discussed on the show for a while. I think some of our listeners say it best. We have Nichols in our live chat when you mentioned that it was the year with, I think it was 8 unique spikes of at least 10 points. He chimed in, it sure as heck didn't feel like that. And I think he's right. I think subjectively, a lot of people came away from that year last year thinking, we saw all the headlines, is VIX broken? What's going on? Why is it so muted? I think subjectively to a lot of our listeners and the traders out there, it felt like a year where, as you mentioned, VIX kind of said, who cares these days when the S&P is selling off 2%, right? Kind of shrugged its shoulders at a lot of that. So, yeah, I think these data points are going to come as a surprise to a lot of our listeners there, Jim.
They came as a surprise to a lot of people, me included. The challenge was that, the spikes that did happen weren't as violent as some of the spikes we've seen in recent years. Obviously, COVID was an outlier. And so, it was whack-a-mole. The VIX popped up and got whacked right back down. The VIX popped up and whacked right back down. CPI yesterday was a perfect example. It's clear that a lot of people were hedged against a CPI print that took the market down. And when that didn't happen, man, the mallet came out, the moles started scurrying back into their holes. And as Mark pointed out, we've got more today because, the banks reported crappy earnings and outlooks. The future sold off and then it turned right back around and we're headed back to something close to break even in S&P right now.
Yeah, I'm looking at some of your other data points here about the streaks of backwardation. Not one we talk about on the show, but one that's also empirically very interesting. I think you could intuitively look back at last year and guess last year, there probably weren't that many long streaks of backwardation. And this chart backs it up. We were kind of nowhere near the pinnacles for this chart. The big year for backwardation streaks, 2011, as well as 2019. Also, 2008, I think a lot of people would have expected 2008. Some of those other years, maybe a bit of more of a surprise to people. But yeah, where we stack up now compared to the backwardation of even 2011 is nowhere near close. So obviously, the VIX futures also had a bit of a kind of big resounding yawn most of last year, Jim.
Yes. One other way to look at it is using the CBOE's 9 days to 1 year. And, when the VIX peaked in early March, that was really the high point for the whole volatility term structure using the SIBO measures. We started the year off with a very benign, actually a strong contango slope. We came into 2022 with 9-day VIX hovering around 13. That got as high as 38 in less than 3 months. And, we settled the year with every one of those data points north of 20. So, there is still, or I should say, coming into the year, there was still a decent amount of concern built into the term structure. We've seen some of that come off, but it's hard for me to believe that 2023 is going to be a yawner with all of the things we're lining up as potential market interruptions.
Now, the other data point that you mentioned, which is one that we talked about a lot last year, is if you just looked at this, if I just showed you the charts for, let's say, SPX off somewhere around 20%, a NASDAQ off somewhere around a third for the year, if I just showed you those apropos of nothing else, devoid of all context, you would look at those charts and you would say, oh my God, what a year for hedgers and for put buyers. They must have done very well. And yet, as we talked about many times on the network, as you show here in your data, and outside of a short window, maybe at the beginning of the year where some of the sell-offs were a little bit sharper and kind of took the market maybe unawares a little bit. So you saw a nice little vol spike as a result. You can kind of make some money in those environments as a put buyer. But outside of those limited scenarios in Q1, outside of that, you really didn't have an opportunity to make a lot of money hedging or buying puts. In fact, for the most of the latter half of the year, it was pretty much a losing trade, as you point to here, Jim. Did that surprise you, or was that maybe a bit of a point of frustration for you guys over there at TOROSO Advisors?
Well, it would be frustrating if we hadn't kind of caught on to it fairly early in the year. It was particularly frustrating for anybody who was trying to use VIX calls to hedge their portfolios because, just using the SEBO's VXTH index, that which buys S&P and then puts some VIX calls in on top of it, that underperformed S&P by, 6% over the year. And so, that had to be very frustrating for anybody who was trying to put VIX call premium into their portfolio as a hedge against the downside. That premium cost you a lot.
It did. And obviously, one of the major takeaways for a lot of our listeners that you touched on earlier for the year was the fact that VIX was muted, broken, call it what you will, last year. Definitely underperformed a lot of people's expectations. We've seen a lot of different people putting hypotheses out there into the ether as to what that may be. I'm curious for you, Jim, as you crunch the numbers for your epic treatise there. Why do you think VIX maybe, according to some people's expectations, underperformed last year?
Well, yeah, the tin hat folks are running around FinTwit like crazy. The VIX is manipulated. It's broken. We have to remember, what the VIX measures specifically, 30-day implied vol. And, the levels that VIX spent most of the year hovering around in the mid-20s, implies a daily move in the S&P of, call it, a point to a point and a half. And, the average move, even when the S&P was going down, didn't exceed that very often. So, the VIX was pretty spot on with respect to what the implied move was going to be. People have this thing in their head that when the S&P goes down, the VIX should go up. But if the VIX is already up, then it doesn't have to go up anymore. And that's really the story of 2022, was that the VIX just stayed at levels that implied the kinds of moves the S&P was making. And to one of your earlier comments, most of the moves that the S&P made were not abrupt enough to create real surprise. So, I don't think the VIX is broken. It's one measure that's commonly used. I'm sure there's been lots of discussion about the big rush into very short-dated options activity. Zero DTE is going to be the T-shirt for 2023. And, does that have an effect? It absolutely has some effect, but that doesn't mean the VIX is broken.
So you're on the more of the subjective tip. People subjectively feel like VIX should have done more, but in actuality, you think it performed as expected.
Yeah, I do, generally speaking. It didn't get shocked beyond the invasion of Ukraine, which I think was not on everybody's bingo card. Even though, there were threats, I think a lot of people felt that it wouldn't actually happen. And once we got past that, everything else really was fairly readily anticipated. These were not huge surprises that we saw. And as a result, you didn't get the big sustained moves that perhaps people were hoping for and perhaps were betting on. And, it doesn't take more than a couple of losing bets to have people howling at the moon and saying, the VIX is broken, it's manipulated. The Fed is shorting vol to ruin all of us. I kind of doubt it.
I haven't heard that one. I haven't heard the Fed is actively shorting vol, but the tinfoil hat crowd, they can get up to some fun stuff out there. Mr. Meatball, what are your thoughts on the takeaways here from Jim's epic treatise? Maybe Jim will post it online for you folks listening so you guys can see it for yourself. It is a multi-page analysis here of all the highlights and takeaways and questions from the year that was 2022 from a vol perspective. Very interesting stuff. Mr. Meatball, what are your thoughts on some of those takeaways? And then B, what is catching your eye? And as you put it at the top of the show, this somewhat weird week in the markets.
Yeah, I think Jim was spot on. We're finally I've got people telling me, "Oh, the VIX is 18. That means it's low." No, we're not moving, so the VIX is still really, really high. It's just been, the market can't seem to make up its mind the last 2 days. It liked CPI, it hated CPI. We hated bank earnings. Now we're going to buy them. We have been all over the board. The range on JP Morgan today is massive. And they have come for the banks. Some of these other stocks have managed to turn around. And it's been and VIX itself is now approaching 18. And interestingly, VVIX vol is rallying a little bit. We're starting to see maybe some interest start to peak in some of these VIX options, which would make sense. They're dirt cheap.
Yes, I've been kind of flummoxed by the point-counterpoint back and forth over CPI. It's terrible. It's great. It's terrible. It's great. You're right. We've been kind of whipsawing around based on that number yesterday, some of the sentiment data today. And of course, we are actually starting to see real concrete earnings again, which is always fun to have a real number to sink our teeth into, I should say, as opposed to all these vague numbers that we somehow have to back into a Fed calculation and then let the dance ensue from there. Speaking of markets whipsawing, we're seeing that today. We keep trying to get green on the day. It doesn't seem like we're going to quite make it, at least for right now. NASDAQ is managing to be green right now. It's like most of the indices, we're flirting with it as we started talking. I think Jim spooked them all because then we started to sell off again. S&P off about 0.15%. Dow off about 0.1%. As I said, NASDAQ off about pretty much unched to 0.05% green coming into this portion of the show. VIX, as the Meatball mentioned, threatening the 18 handle, 1810 right now, down about 3.15 points from where it was this time last week. Remember, this is a holiday weekend as well, listeners. We neglected to mention that at the top of the show. We are off again on Monday for MLK Day, so some of that obviously being priced in here as well, but still just an aggressive about face here for VIX, just kicking the 20 handles to the curb and fully embracing the teens. We'll get Jim's prognostication for the end of year VIX and a little bit later at the end of the show. I'll be curious to see what level he has in store for us there. VVIX also, as I mentioned before, listeners, we were playing with that 73 last week. I said, we're probably not going to hang out there too long. And that is the case right now. Still low, still at a 79, but up about 6 points from where we were this time last week. All right, Mr. Jim, if you can pry your eyes away from your mountains of data in your epic 2022 treatise, what is catching your eye out there in this weird second week and indeed first full trading week of the new year?
I think it's the ongoing bullish response to everything. Really, and if you think about what's been happening in the vol space really since late October and in the broader market, we've definitely seen a turnaround, notwithstanding all of the reasons that people are concerned about another leg down. I keep waiting for something to kind of dampen the enthusiasm. But as Mark pointed out, We hate CPI, we love CPI. We hate bank earnings, we love bank earnings. I hadn't looked at an updated chart of JP Morgan today. It's laughable. And it shows up actually in the market internals. We've seen Brett quietly do a turnaround to a more bullish direction. There's a quiet little bull market going on, and it has taken volatility out to the woodshed and beat it bloody.
Yeah, volatility looking pretty bloody right now. The same can be said for ye old VIX futures out there, listeners. They're taking that front portion of the term structure out to the woodshed as well. As we're kicking off this segment, that Jan future down nearly 3 points, about 2.7 points. The Feb future over 2, about 2.1 points. So they're coming for that front portion of the curve. So add this, Jim, to the treatise for next year as the period that is not in backwardation, because they are annihilating that front portion of the term structure. Mr. Meatball, anything catching your eye out there this week in the ever-eroding land of VIX futures, sir?
The curve is really flattened up. I think you can't really deny it. The curve has gotten a lot flatter, a lot tighter on the cash index. It's starting to normalize a little bit, it looks like, which is usually a good thing. But yeah, it looks a lot more normal than it did. There's not this massive premium out in the back months like there used to be. And yeah, that is what I'm seeing, is that the curve looks kind of like it should look, which is unusual.
You expect strangeness and weirdness now, huh? When it looks normal.
Well, I mean, that's the way it's been for the last whatever number of months of, going on 24 months. And now we've got a curve that looks like it's 2017, which is I think refreshing.
Uh-oh. Wash your tongue out with soap, sir. We want less vol. That's all good. We want a good year. 2017 was the year that VIX went to die. I don't know if anyone wants a repeat of that. The 9 to 12 range, not exactly great for the Vol View show or for the pocketbooks of a lot of our audience. Mr. Jim, what do you have to say to that, sir?
The only comment I would make there is I agree that the shape of the VIX futures term structure, has regained its contango. But we're still at relatively healthy levels, front to back, healthy meaning high. And I do recall vividly and fondly 2017 because it was the year of short vol. And, I'm not sure the back end of the curve got as high as the front end is now. I'd have to go look, but, we are in contango. The trade is sliding down the curve. And I don't think there are too many people out there who feel comfortable and confident with that trade on.
No, that is definitely the case. Let's keep on rolling. Let's see what's going on out there in the land of the vol options. Let's start with the big dog, which is VIX. Looking a lot bigger this week, listeners. It seems like VIX is definitely making up for lost time. And we talk about the seasonality of not just vol, but also of VIX volume. Obviously, it falls off a cliff going into the end of the year, the beginning of the new year. Then it starts to pick up, and we're starting to see that right now. The ADV up 76,000 contracts on this time last week. Remember, it was threatening 500K in the wrong direction. Now it's up to 574,000 contracts. So firmly north of 500,000 contracts. And today, beating it pretty much every day this week, beating that level. Already today, 708,000 contracts. We got to go back a little ways to find another day that equals that level of paper, let alone some of the others we saw this week. Before we get into the week, let's see how the OI is shaping up. What are the top 10 positions looking like out there in VIX land right now? Well, first, we're back to 9-1 calls over puts. So only one put again in the top 10, listeners. There were 2 last week. One of those has been kicked to the curb. Also seeing a little bit more OI starting to pile in. Remember, last week after, we talked about after the DECE expiration, not a lot really rolling back in to replace it as expected. It was the end of the year. Everyone's off doing holiday things, not slinging VIX, but now they're back, listeners. 9.7 million contracts open in VIX land, which is starting to look a little bit more respectable. Cost you 126,000 contracts to break into the top 10 in VIX land. That's Nothing to write home about. It's about, I suppose, what you could expect. That gets you to the March 30s. Number 9, 135,000 of the Feb 60s. Then we found them. There's Waldo, number 8, the first and only puts in our top 10 this week. 136,000 of the Jan 19 puts. So those are going to go the way of the dodo soon. We'll see if we see more puts sneaking in to replace it. Right now, the puts have been the way to go. Only one in the top 10. What does that tell you, listeners? Number 7, 148,000 of the Feb 30s. And then here we go for the rest of it, listeners. Number 6, $1.61 of the March 40s. Number 5, $1.63 of the Feb 80s. Number 4, 164,000 of the March 80s. If you find any of these strikes surprising, listeners, I will say, A, welcome to the show. You're obviously a new listener. And B, you probably haven't been paying attention to the vol market for the last year. These strikes have become normal, commonplace every week. Number 5, like I said, $1.63 of the Feb 80s. Number 4, $1.64 of the March 80s. Number 3, $1.70 of the Feb 70s. Number 2, 205,000 of the Jan 70s. And number 1, with a decent size bullet, all things considered. Nothing huge, but not small either. 210,000 of the March 75 calls. So yet again, dominated by upside is our top 10 in VIX land. And as you look out there today, 708,000 contracts on the tape. Let's see what's lighting it up out there in this tsunami of paper. This equates to 2 or 3 days worth of paper in mid to late December. It really was not doing a heck of a lot at all then. So 708,000, definitely making up for lost time out there. The big dog today, you might be forgiven for expecting more puts in our top 5 most actives today, but you would be mistaken. 62,000 of the Feb 29 calls lighting it up out there today, followed by 42,000 of the Jan 20 puts. That's our first and only put in the top 5. 42,000 for number 3 of the Feb 25s, 40,000 for number 4 of the Jan 35s. And rounding out the top 5 today, 27,000 of the April 24s. So a whole smattering of calls and only one put on the day when they were coming. They're coming for vol hot and heavy. Yesterday, even more paper on the tape, listeners. 840,000 contracts. That's another very impressive day. Haven't seen one of those in a while. And the big dog yesterday was actually pretty sizable. 108,000 of the Jan 19 puts. So if they were opening buys on those bad boys, I got a feeling they're looking a little happy today. Number 2, 47,000 of the Jan 20 puts. Number 3, 38,000 of the Jan 22 calls. Number 4, 37,000 of the Jan 21 puts. And rounding out the top 5 on a very active Thursday, 30,000 of the Jan 18 puts. Dialing it back to Wednesday, also a very active day, 722,000 contracts on the tape. Again, mostly calls on Wednesday, 64,000 of the March 40s for number 1. Number 2, 49,000 of the March 30s. Looks like maybe some ratio, some vertical action there. Number 3, 40,000 of the Feb 80s. Number 4, 28,000 of the Jan 20 puts, our first and only put in the top 5. And then we're back at it again. Number 5, 27,000 of the Feb 70s. Let us not forget the Feb 70s and all this other madness, listeners. Tuesday, 580,000 contracts on the tape. The big dog, 60,000 of the March doubles, a.k.a. the March 55 calls. Number 2, 57,000 of the Jan 20 puts. Number 3, 28,000 of the Jan 19 puts. Number 4, 23,000 of the Feb 30s. And rounding out the top 5 on a decently active Tuesday, 21,000 of the Jan 30 calls. And Monday, completing our first full trading week of the new year. And it won't be one next week as well because we are off on Monday again. But this Monday, we were open 595,000 contracts on the tape. About 60,000 of the Feb 60s was the big dog on Monday, followed by 40,000 of the Aug 60s, going all the way out to August already. Is it that time already? Number 3, 23,000 of the April 40s. Number 4, 23,000 of the March 40s. Looks like a bit of a roll, maybe a nice little time spread opening on both legs there. Number 5, 22,000 of the Feb 25 call. Mr. Meatball, we had quite the tsunami of activity this week, making up for lost time, obviously, out there in VIX options. A ton of crazy prints, these Jan 19 puts, Feb, every upside strike you could think of. Even got some AUG upside, the AUG 60 sneaking in there. What caught your eye out there in this tsunami of VIX paper this week, sir?
Yeah, it's interesting. While the VIX is making new lows, they're coming after calls. And just a little strange today. is again, very much like watching paper dry. They're buying some Jan 35s. They're buying April 24s, Feb 25s, Feb 27s. They're starting to decide. They just decided that it's time to put on some upside hedges with VVIX this low and the VIX low. They're scooping is the way I see it.
Yeah, I would have wagered pretty heavily that we would see a few more puts percolating into the top fives on some of these days this past week, but including today, but apparently not. Only one put today and only a handful of puts making it into the top five over the entirety of this intriguing week. Jim, I know when you're not busy creating epic treatises, you don't really watch a ton of VIX options paper, but anything catching your eye in this flurry of activity in the first full trading week of the year, sir?
Well, I think one of the better reviews of 2022 was done by Dean Kernut on his podcast. And one of the things he was talking about was trying to make sense out of the upside call buying in VIX. And his point was, if what you want is a relatively inexpensive hedge for equity exposure in your portfolio, consider what many people would look at and say was a crazy out of the money call option on VIX, because let's say you buy the 70s and, VIX is at 25. If VIX goes to 40 or 45, those 70s are going to pick quite a bit of value, even if VIX never touches them. So as an active hedge in a portfolio, I got to believe that that's where some of this upside call activity is coming from, is people saying, as Mark pointed out, this stuff's cheap, at least on a historical relative basis. Let's put some of this in there as real crash protection. If it doesn't work, it doesn't cost us much. If it does work, we're going to look pretty smart.
Indeed. They had a challenge with some of those working last year. We'll see if perhaps this is the year where that stuff can pay off. Speaking of paying off, listeners, if you've held SVIX over the last couple of months, I've been throwing some shade at it. We've had the Once and Future Dr. VIX and others coming on here to champion it, saying he likes it. Well, if you held it over the last few months, you're looking pretty good right now in SVIX. XVIX hitting pretty much a 1720 right about a few minutes ago, which is the all-time high for that product. You've never seen SVIX as frothy and as juicy as it hit today out there. That's quite a run it's had since its low, which actually came, you might have thought it might have flirted with it later in the year, late November, December. No, that low actually came back in October 11th. It hit a 914 level. Ever since October 11th, this thing has nearly doubled. So quite a run here for SVIX. Even though I've thrown shade at it, it has managed to exceed expectations, at least for the underlying. Again, new 52-week high. Options-wise, that's really what I've been throwing the shade at, because it doesn't really do a heck of a lot. The ADV has ticked up a little bit. It's up to almost 1,000 now, 998, but still it seems like folks just can't be bothered to trade the options yet on SVIX. Only about 674 going up today on a day when it touched a new 52-week high out there. Let's do a quick top couple of positions out there, because there isn't a ton of size. Let's do a top three. Number 3 out here, we have the Jan 6 puts, 1,200 of those. Number 2, 1,300 of the Jan 16 calls. And the number 1 size open position in SVIX right now, 2,200 of the Jan 14 calls. As I just said, listeners, just hit a new 52-week high of 1720. So if folks were loading up on those 14s and 16s, and they have a nice little smile on their face, and hopefully they've got some exit plans in place to get the heck out of Dodge on those. Flipping the script, SVIX hanging out pretty much at new 52-week highs. Its compatriot product there, UVIX, is just throwing itself off cliff after cliff, racing to oblivion as fast as it possibly can. Was at about a 415 when we kicked off the show, still hanging out at about that level. It puts it down a full point from where it was this time last week out there. So SVIX, I should say UVIX, winning the race right now between UVXY and itself, UVIX, in terms of Who can race to zero first? In terms of paper, we've seen the ADV actually dwindle a little bit out there. Only about 5,100 contracts. That's the ADV right now. It's down about 400 from last week. So volume not moving in the right direction. But then again, it is kind of a seasonally quiet time of year. Today, doing a little bit better. 2,600 contracts on the tape out there. Let's look really quickly, see what the top positions. Let's do a top three out here in UVIX as well in terms of what are the size positions. Number 3, we have 1,400 of the Feb 13 calls. Number 2, 2,200 of the March 25s. 25s, wow. What would it take to get UVIX even approaching a 25, listeners? That's an interesting thought experiment in and of itself. Wow, 25. Intriguing stuff. Number 1, 2,400 of the Jan 6 calls. That makes a wee bit more sense. Even the 13s are, shall we say, optimistic. 25, I don't know, perhaps a bit of a bridge too far. Mr. Meatball, what are your thoughts on these, shall we say, optimistic March 25s and everything else we're seeing out there in the twins of UVIX and SVIX this week, sir?
Yeah, well, there's some big news on UVIX. It's going to reverse split on the 25th.
Ah, they do have the date. I was just about to say we should discuss the reverse split next. So give it the date again for our listeners.
The January 25th. That's going to be an exciting day. I'm looking forward to trading UVIX once it gets a little more teeth to its options. I think that's going to draw in some more customers. The stock has been
nice 25 for 1 reverse split. Get it up to a hundo. What do you think?
Yeah, I would love go for it. But this is its first one, so it's like this is like it's christening of its first reverse split. It's like the first communion of reverse splits for UVIX. It will have many more communions, but this is its first, and it'll always be special. Hats off to UVIX, and yeah, SVIX is doing what it's supposed to do. Rallying as vol is falling off, going up as vol drops, and it is performing the way we would want it to perform.
That'll be fascinating to watch. I was joking about 25 for 1, but that would certainly be great. That would be a nice little Christmas gift to all of our listeners out there. Listen, if they were to go, let's say, UVIX at a 1 hundo, I could just see the lip smacking of our listeners at even the prospect of that. Jim, do you pay a lot of attention to these kind of newer additions to the vol space? We have our inverse friend finally kind of kicking into gear, doing a little bit of what it was supposed to do, which is hit a new 52-week high on the day when the VIX is off 3. And UVIX finally getting a bit of a reverse split. Does that make it more intriguing to you, sir?
Oh, they're both very intriguing to me. They are front and center on my radar as tools to be used to express a view, long or short, on the volatility trade. And, they're continuing to pick up steam. They're behaving exactly the way they should behave. They've got good underlying indices, long vol and short vol for those people who aren't aware of the underlying indices. I think, they are constructed better than their predecessors. In the case of UVIX, that was TVIX, and in the case of SVIX, that was XIV, and the old SVIXY, perhaps. But I think they give targeted exposure that there's an audience for. Not everybody should be using these, but those who know are gonna look for them to continue to pick up momentum, pick up volume, pick up assets, and I think they're here to stay.
You heard it here first from Jim Carroll of Toroso Advisors. Get your grandma out of T-bills and into all the UVXY. Load up. Am I reading between the lines correctly there, Jim?
She bought the 25 calls.
Oh, yes, that was grandma. I forgot.
but that's because she heard about the 1 for 5 reverse split.
There we go. She was just getting in a little bit ahead of that. There we go.
if the buyer of the 25 calls did it because they read about the 1 for 5 reverse split, then good luck with that.
They got some bad news coming, unfortunately. I was looking as you were talking, Mr. Meatball. No insight yet into UVXY. I see a lot of people guesstimating a lot of dates. The 17th, that's all nonsense. We don't have any real dates yet, listeners. So I said before, it might be a bit of a race, not just a race to zero, but a race to who could really announce and get their reverse split off first. It might be a way to see which of these products is going to steal the thunder. You've been predicting UVIX is going to steal UVXY's thunder for a while. It might have behooved the folks over at UVXY to maybe do their reverse split first just to maintain their lead out there. But I guess the newcomer wanted to get the ball rolling first. In their defense, they are closer to zero, so maybe they needed to do it more. But intriguing stuff. Speaking of UVXY, 535 when we kicked off the show, still hanging out at around that level, down almost a full point, about 0.9 of a point. But as you can see, clearly more than a point, about 1.2 points north of where UVIX is hanging out right now. Paper-wise, though, it's a very different beast. 207,000 contracts on the tape for UVXY. That compares to 2,600 for UVIX. So maybe UVXY just doesn't even see them as a threat yet. The ADV is close to 200K, 195,000. That's up about 3,000 from this time last week. So starting to go in the right direction as well. Let's do a quick top 5 in terms of positions out here. By the way, if you're wondering, the top 10 in UVXY right now, 9-1 calls over puts out here as well. So UVXY usually put heavy, but when we get to this low of a level, not as many put strikes to choose from, just mechanically and logistically. So makes some sense that calls are going to be winning the dance out here. Number 5, 18,000 of the 6.5 calls expiring today. So good luck with those. Number 4, 19,000 of the 6 calls also expiring today. So also good luck to you, sir or madam. Number 3, 20,000 of the 6s expiring next week. Number 2, 22,000 of the 75s. That's right. I remember these expiring next week as well. A hearty good luck to you. Hopefully you're not taking Jim's suggestion there, and hopefully you're not doing that for the reverse split, in which case, again, yeah, go check your handbook again. And number 1, 29,000 of the Jan 10s. Those are optimistic enough. The 75s, man, my goodness. Let's get on out really quickly because we're coming up against it. To ye old VXX. Had a lot of people telling me their vol takeaway last year was that they kind of washed their hands of VXX. And I can certainly understand why. VXX hanging out at about a 12 over the course of this show, a little bit below that now, down about 1.3 points from last week. In terms of paper, it is starting to make a recovery. It's already done about 75,000 contracts today. That's over its ADV, which is 63,000, which is in and of itself is already up about 2,000 from last week. So starting to move in the right direction. But I guess this is one of those once bitten, twice shy kind of things. This thing has bitten you many times. So what does it take to make you really wash your hands of it? The Meatball has said before he likes it as an indicator. And I can certainly see that as a use case for people out there who maybe are just don't want to deal with this product anymore, but they want to keep it on their screens to watch. And I'm curious for you, Jim. Last year was kind of an infamous year for VXX. It kind of decoupled through much of the middle of the year and just went crazy. It's starting to perform a little bit more normal these days. I'm curious for you. Have you washed your hands of VXX like many of our listeners?
Look, to me, the use case for VXX is that it is structured as a note. And as a result, does not give you a K1 when you own it. And so there are some people who are allergic to K1s. They only want 1099s to report gains and losses. And VXX is the remaining volatility exchange traded product that gives you that outcome. So I think for people who are trading in taxable accounts, VXX is getting its feet back under it this year. It may be that the provider of VXX, who shall remain nameless, has found the error in their ways and gotten themselves better organized. So there is a use case for it. It's still got a reasonable options chain and options activity. So it's worth keeping on the screen.
Might be a good question of the week for us coming up. Have you guys washed your hands of VXX? Are you still willing to trade it? Maybe more of a flash poll when we're doing vol view, something like that, but a good one to poll our audience on. Speaking of polling people about things, it's that time, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Well, we got one vote already. Nichols in our live chat saying he's done with VXX. I could certainly understand what you're putting down there, Nichols. You know, that these are Franken products. I've said it before many times. Whenever you have these products attempting to replicate something else out there, some do it better than others. They have all sorts of interesting underlying mechanics and issues and nuances. Jim just mentioned the lack of a K1. That's intriguing and attractive to a lot of people. But people forget a lot of these products even have K1. So there's all these nuances that go into these products. And when sometimes they start to go haywire under the hood, all sorts of madness can result. That has nothing to do with what's going on in the vol market or anything else. That was the case with VXX. That had nothing to do with the vol market. That was all an issue with Barclays. And we saw that in the past with TVIX. That thing completely went haywire. Nothing to do with the vol market. It was all the underlying fund flows. So these Franken products can go haywire. And it doesn't have to be a massive 30% pop in VIX that does it or anything like that. It could just be a very quiet, tranquil day in July, and one of these underlying mechanics of it just goes haywire and just breaks. And there you go. Look out below or look out above in the case of whichever product it is. Let's get out there to the crystal ball time because it is that time of the year, listeners. A lot of us have already weighed in on our crystal ball prognostication for the end of the year. So we'll get Mr. Jim on the record here in a little bit as well. Remember, he also did offer fabulous prizes for whoever picks the high for the year in VIX. Let's see where we're hanging out right now here. And coming into the end of the show, we're still hanging out at about an 1810 in VIX land. So let's see. Last week on the show, it was myself and the once and future Dr. VIX and Mr. Meatball. And weirdly enough, I was the lowest man on the totem pole. Usually I'm feeling the highest vol, the most vol. This last week I wasn't. I was the only person who had a teen handle. I had 1936. Alas, it was not enough, listeners. They just came for vol this week. So none of us are even within a point, let alone our 10th of a point. So no winners there. The once and future Dr. VIX, the next closest at his algorithmically predicted 20.234. He went out 3 decimal places and he ended up getting no closer. And then Mr. Meatball doing his palindromic nonsense at 2332. No winners. Looking here really quickly, a lot of our listeners all were in the 20 handles as well. So not a lot of teens, except for me. Option God had a 1980 at least. That's the only other teen that I even see here. We'll have to keep scrolling through. Our producers will go through all of the write-ins, listeners, and see if anybody else had a close within a 10th of a point. If you do, fabulous prizes for you, but I don't see any. That shows how challenging this VIX guessing game is. All that a long way around, Jim, to saying no winners this week. So you get the dubious honor as our guest of going first. What are you feeling for this time next week? Then I'll let you mull a little bit, and I'll come back to you for your end-of-year vol prognostication in a bit.
For the end of next week, I'm back in the 20s. I'm at 2.5.
22.5, you said?
21.5.
21.5. 21.5 for Mr. Jim. So back in the 20s. So that'd be a nice little pop. That's the weekend and the holiday and a few other issues getting back into the market. Interesting. But then again, you can maybe argue this maybe this a little bit overdone here as well. We shall see. Let's see who was the next closest. That woll be me. So I guess I'll have the Meatball go next because I was the closest one. I should get the fun of going last. So Mr. Meatball, what palindromic nonsense do you have in store for us this week?
All right. Well, let's go. You know, I'm with Jim. I think we're going to be higher. We have more earnings. We're going to be heading into the big NASDAQ week the following week, which I think will pump things up a little bit. I'm going to go 19. What did Jim guess?
Jim was 21.5.
All right, then I'm going to go 1991.
1991, an excellent year. And a good vol prognostication. I don't know, listeners, that's up to you. What do you folks think? All right, 21.5, 1991. Like I said, we're at almost an 18, even about an 1810 coming into the end of the show here, listeners. I also feel a little bit more juice, which is no surprise. That's the way I usually have been for the better part of this last year. And it has worked out. I did win the crystal ball contest, including the first show of the year. I got a crystal ball last week. That was a nice little way to kick off. I got a bullseye, I should say. A nice little way to kick off the new year out there. I am feeling a little bit more vol. The question, of course, is how much vol? We already got Jim going way high there, 21.5. I like a little more vol. I like more than the meatball. I don't think I'm feeling quite as effervescent as Mr. Jim there. So I'm going to say a 20 double, a 20.55. So meatball, 1991. Mr. Jim at the upside, 21.5. Me taking the Goldilocks this week, which also happens to be the right one, listeners, at 20.55. Looking at some of our listeners really quick. 18.20 for Frank. So, wow, he's feeling probably about the same as where we are right now. Queen, 19.70. Options Queen. Watch out for that one. She's usually spot on. Nichols trying to scum me at 20.65. What are you doing, Nichols? Coming a tenth of a point away from me. Get your prognostications in there if you have not already. If you're listening on the on-demand podcast version, listeners, just send them in. Add options. You could DM us questions at theoptionsinsider.com. That also works. Cost you nothing. If you win, you get within a tenth of a point. You can win fabulous prizes. All right, everybody. That music means we've come to the end of another hour-long sojourn through the world of volatility. We planned for 48 minutes of Jim's epic treatise. We got about 22 or so. So, Mr. Jim, well done. Hats off to you, sir. If folks want to see the full text of your epic vol treatise on 2022, where should they go? What should they do, Mr. Jim?
Well, that's still TBD. I'm working with my colleagues to figure out where we want to hide it on the interwebs. But if anybody wants to send me a direct message to @VIXologist in the Twitter sphere, I can arrange delivery at some point when it's finalized.
There you go. We got a nice little website for you. We can post it up for all the folks. In the meantime, hit them up @VIXologist on Twitter, listeners. And you could maybe get your hands on it for yourself. Mr. Meatball, if folks want to get their hands on a little bit of VIX learning, where should they go? What should they do?
Go to optionpit.com and check us out. We're posting great content every single day. You should be a part. If you're not reading my VIX Edge blog yesterday, I did break down why the UVIX split was so exciting. And previous day I broke down how to approach earnings and CPI. So if you want a good vol approach to understand different stuff, come to optionpit.com and read my blog.
Optionpit.com is the place to go. We got to get on out of here. That will conclude our broadcast week for all of our on-demand listeners. I want to thank all of you for joining us out there and for continuing to drive my Banwell bills up into this new year. For all you pro folks, hang out. We'll be back in a little bit with Options Oddities. Then back again because we like you folks so much with a great pro Q&A with none other than Mr. Dan Gramza immediately after Options Oddities. So my producers hate me, but they do love you folks. So stay tuned for that on the pro side. If you want to check all that out for yourselves, listeners, only one place to go, theoptionsinsider.com/pro or /secret club. And for all of you out there, thanks for joining us this week. We'll see you back here, not on Monday. Remember, we're off on Monday for the MLK holiday, but back with our regular slew of content throughout the week, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.